This week is going to test everything we know about markets, money, and mindset. We've got a Federal Reserve decision that could move trillions of dollars, a face to face meeting between President Trump and President Xi of China that could reset global trade, and tech giants like Apple, Amazon, Meta, and Google all reporting in the same 48-hour window. Add in government shutdown closing in on 30 days, and we've got the perfect storm for volatility. So buckle up, because this week could be the spark that sets the next financial wave in motion. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl on this beautiful Sunday. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, stay disciplined, and stay ready for opportunity. Let's dive in right now. Well, all eyes are on the Federal Reserve this Wednesday. Seems like every week, but particularly this Wednesday is important. The big question, will Jerome Powell hold, hike, or hint at cuts? Likely, he's going to cut 25 basis points. Now, most analysts expect rates to go down a little bit. Like I said, 0.25. But that's not the story. The story is the language. Powell's tone in the press conference could be determined whether he's going to make markets rally or crumble. If he hints at more easing later in the year, risk assets like Bitcoin and equities could pop. But if he stays hawkish and warns about sticky inflation, expect a pullback across tech, crypto, and bonds, even if he starts mentioning tariff uncertainty. Remember, the Fed isn't just adjusting rates, they're setting sentiment. Markets move on what's happening right now, but on also what's expected in the very near future. Historically, the week of a Fed decision is very volatile, especially when we have Bitcoin, because Bitcoin could thrive in volatility. So it's going to be a great week to nobody has to say and to see what everyone's thinking around the Fed, especially when we read the minutes. But remember, this is not financial advice. It's for educational purposes only. We're here to study the signals and sharpen your discipline, not just chase the hype. But let's talk about earnings, because this week is stacked. On Wednesday, we've got Microsoft, Alphabet, Google, right? And Meta, three of the biggest names in the Magnificent Seven, reporting back to back. Then Thursday, it's Apple and Amazon. That's $5 trillion in market cap reporting in less than 48 hours. These earnings will tell us how strong the consumer spending really is and how basically tech is handling inflation, AI, and global demand. Remember, when big tech moves, the whole market moves as well. And here's where Bitcoin ties in. When liquidity flows into growth stocks, Bitcoin often follows. When earnings disappoint, liquidity also dries up. So traders are watching closely. If big tech misses expectations, more labor shortages, like they're firing people, we could see a risk-off reaction. And that pressure might spill over into Bitcoin's short-term price. But if these giants crush their earnings and guide higher going into Q1, I guess, of next year, or Q4 technically, then you're going to see renewed optimism, especially if the Fed stays neutral or, lowers 0.25. Also, we have President Trump meeting with China's president, right, on October 30th. The main topics, trade, tariffs, and tech, and rare minerals. Some reports suggest Trump may propose up to 100% tariffs if China doesn't agree to new trade terms. That could shake global supply chains and push inflation higher, though it sounds like the talks are going good so far. But for crypto and Bitcoin, this meeting matters more than people realize. Trade tension equals uncertainty, and uncertainty drives investors toward hard assets like gold and Bitcoin. On the flip side, if the meeting goes well and trade tensions cool, that could spark a risk-on rally across global markets, tech, equities, and yes, Bitcoin too. Bottom line is this. This week, every word that comes out of the meeting, the Fed meeting, can move markets. The U.S. government shutdown is also creeping towards day 30. The longer this drags on, it can hurt GDP, and the more strain it puts on workers and data reports and economic confidence overall. We've already seen delays in key economic data already, and investors hate uncertainty. Historically, shutdowns rarely crash markets, but prolonged ones do eat away at consumer sentiment. What's interesting is how Bitcoin reacts during political gridlock. When trust in institutions erodes, alternative assets like Bitcoin tend to shine. We've already seen it with gold. You see, Bitcoin doesn't shut down, though. It doesn't wait for Congress. It doesn't print more supply. And that's why so many investors quietly accumulate during times like this. Let's end on a lighter note, not a lighter note though, but surprisingly deep questions that ties back into, how we think about time, how we think about freedom, how we think about wealth. If you're buying a vacation home, Whether it's a lake house, a ski cabin, a beach escape, or a country retreat, what's the perfect distance for driving? If you have a lot of Bitcoin, are you going to sell some of it? Because too close and it doesn't feel like a real getaway. You end up using it less though if it's, kind of always there. But too far, you're really not going to make the trip very often. Studies show, and travel behavior data shows, that a sweet spot is around 90 minutes to 3 hours from home. Close enough to be spontaneous for weekends, but far enough to feel like you've escaped the normal routine. That same principle applies to investing. If your assets are too close, meaning short term, emotional trades, well, you never step back and enjoy the process. But if they're too far, meaning too abstract or detached from you, you never stay engaged enough to grow. The key is balance. Engaged, but not reactive. Invest with intention, not impulse. This week has all the ingredients for volatility: Fed policy, big tech earnings, geopolitics, and political gridlock. But volatility isn't the enemy, emotion is. That's why we talk about leadership on this channel. Stay calm, stay informed, and remember, opportunity often hides in the noise. Which story are you really going to watch this week closely? The Fed? The big tech? Trump? I don't know, but I want to know. Drop your comments below. And don't forget, hit that like button, subscribe to the channel if you haven't already, share this episode with someone who loves Bitcoin and financial truth, and get involved. Be part of the community. I'm glad to have you. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.